Welcome to Pressure Points. Our topic is Google earnings, and I'll start just from the highest level, how the stock is doing. At the time of this recording, we're about an hour after Google's conference call ended, and the stock is up about 12%. It did peak during the conference call, up 14%, but in general, since the numbers have come out, it's been up about the same, about 12%. So big picture is that investors are viewing these results as positive, as they should. And I'll jump into the pressure point, which is search, but also want to talk about what's going on in cloud, Capex, and margins. So starting with the pressure point, which is search, this of course is the pressure point because investors have a concern that as more use of generative AI starts to replace search, that's a negative for Google. And if you use these tools, you'll know exactly what I'm talking about, because in my case, as I use them, I use Gemini and GPT a lot more. Every day I'm using it more, where I'm using Google search less. And so that sets up for this concern. There is the concern in the near term and the long term. In the near term, the March results showed that they're doing just great. Search was up 14% year over year. That was ahead of expectations for looking for 11% growth and a slight acceleration from the December quarter, which is up 13%. So this is just under 60% of Google's revenue. This is important. So for the March quarter, it looked great. And then CEO Sundar Pichai talked about the impact that they're seeing, or gave some more kind of nuanced detail. One piece around this, he talked about the cost of doing these, adding some AI, generative AI to search. And he said they're doing it in a cost-effective way. That was another piece to investor concern. So he addressed that. But more importantly is just how is the overall search experience going to evolve and start to feather in generative AI and how they're going to monetize from it. And so he emphasized the search generative experience, this SGE. That's like this effectively, it's like essentially a beta where they're starting to overlay some generative results with search results. And he said that what their early results they're seeing is that it has been working well in terms of as more people do generative interactions, at the same time that is increasing their search interaction. So just saying that more engagement is better, more shots on goal, more time spent with Google, you're going to end up searching for more. That all makes sense. Eventually, they got to figure out the monetization mechanism around that. So he did, and I think this is why it represents as the pressure point. The last comment that he had on the call wasn't related to a question, but I'm going to read you his quote because it really emphasizes the importance of what's going on in search. He said that there are questions about monetization, and based on our testing so far, I'm comfortable and confident that we'll be able to manage the monetization transition well. And so what he's saying is based on their testing, they believe that they can make this transition. And the testing, he said, it has to do with satisfaction, and what they're seeing it with related to monetization is they bring these two together in SGE. And so my overall take is, as a Google investor in Deepwater and our flagship Titan fund, I feel good about that, and also recognize that we're not out of the woods yet, but at least the early indications are positive. So that's the pressure point. Let's jump next to cloud growth. That was impressive, up 29% year over year. The street was looking for 25%, and last quarter was 26%. So we saw a nice acceleration within that. My take is this is a great example of why the AI paradigm shift is going on. When you're seeing the strength in Google Cloud revenue, and of course, Microsoft reported a slight acceleration in their Azure revenue to 31% in the March quarter. That's just a sign that this is actually happening. Next, related to Capex, of course, with what happened to Meta, everyone was on high alert. In this case, Capex came in 21% higher than analysts had expected. Yes, Capex went through the roof to $12 billion. I was up 91% year over year, but investors didn't care about it, in part because last quarter, Google made it very clear that they mentioned 3 times on their December call that Capex is going to be going up. So I think that they did a good job of kind of letting investors know that this was coming. And then I think what happened with Meta yesterday, people got it out of their system a little bit, some of those concerns about what's going on in CapEx. But up, as I said, 91% year over year. They're spending a boatload. My general sense on the guidance related to CapEx is to expect it to be in line to increase slightly from these current levels. My sense is that it gets us to 12 to maybe $14 billion a quarter in CapEx, which ironically is kind of a similar amount that Microsoft is spending on a quarterly basis. So my overall take on CapEx is it's going up. It should be going up. That's what you do when you want to own a paradigm shift, is make the investments. I'm glad to see investors are okay with that. The last is just related to overall margins. And CFO Ruth Porat gave commentary to expect, despite all the investments that they're making, not just in CapEx, but in hiring around these expensive people, AI people, to build these, despite all of that, they expect margin expansion. And so when I heard that, I thought the stock would start to rally even higher. It didn't do that. It just kind of stuck around. But to me, that is really a great sign that they're doing this balance between going for growth, but also keeping a close eye on the bottom line. Expanding margins, pretty impressive. So that's this episode of Pressure Points. I'm Gene Munster. Bye for now.